Everybody, how are we doing today? If I can just get a quick audio and video check from you here, just to let me know that we're coming through loud and clear, that you can see my screen, you can hear me. All right, thank you, Marion. I appreciate that. How are you doing today, ma'am? All right, good, good. Okay, well, let's get up and rolling here. Let me get our recording going and we will move right along. Okay, well, welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and this webinar today is brought to you by and hosted by Nadex. So we appreciate them having us today. And, you know, I must say Nadex does a really great job at, you know, providing a ton of benefits for their members. Lots of free information, lots of free education, and that's what we're here for today, is to help you understand a little bit about who is Nadex, what is Nadex, and what are the different products they offer, some various ways you can trade them, you know, how you can incorporate them into your current trading day-to-day strategies and systems. So we're going to do a little bit of that today, and let's get our disclosures knocked out here so we can get moving right along. As always, trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Any trading decision is your sole responsibility, and as always, past performance not indicative of future results. Also, one other important thing, guys, as always, you know, on these webinars, if you know, if I'm showing you the Nadex platform and I'm entering an order, or I'm showing you how to use the order tickets to place an order and exit order, that is simply just me trying to help you understand the subject matter that I'm teaching today, or to help you understand how to actually navigate the Nadex platform and the ticket extension. It's in no way a trading, you know, it's in no way trading advice. You know, I'll always be doing it in my demo account. It's not a trade or trade advice. It's me simply here to educate you and help you and get you some more information. So let's start off by, let's hop on over here real quick. For those of you that are new, if you hop on over to nadex.com, you can go through some of these top tabs here. Nadex basically offers two different products. They offer binary options and spreads, okay? Those are two very different products. You can go through these tabs here, get some good information about what each of those products are and how they work. I want to bring your attention over here real quick to the Learning Center. Some great information here, right here under webinars. You can click this. This will show you all of the upcoming webinars. You can see the date and time, the subject matter that'll be covered. You can get signed up and registered for those upcoming webinars, and you'll also get email reminders about those, all right? Down here, you've got videos, trade examples, ebooks, FAQs, a ton of good information. Yes, this webinar that we're on today is being recorded. And if you go right here under Webinar Archive, okay, and right here it says Filter by Presenter. If you click this down, you find us right here, Apex Investing Institute. All right, this is where all of the recordings of the past webinars are placed, and this is where today's recording will be placed. If you've been with us, you know, if you haven't been with us in the past and you want to do some catch up, you can go back and you can watch all these different webinars. But what we kind of do is, you know, we know that there's a mix of you guys out there. Some of you are veteran traders and been with us a while, been trading Nadex a while, and you have this stuff forwards and backwards, right? Some of you are brand new. This might be your first webinar that you're on. So we've got traders at all types of different levels. So that's why we like to record all these webinars, put them in a place for you to find. But as we go forward, you know, sometimes we'll cycle back through, okay? We'll kind of start off with the basics of, hey, what is a Nadex binary? What is a Nadex spread? Some of you are brand new. You might have heard those terms or seen something online, but you don't know what they are, how they work, you know, and we'll go through and just kind of hold your hand and walk you through it, okay? Walk you through elementary school of what is a binary, what is a spread, and then we'll build on that. After you've got the basics, then we'll build on, okay, do you understand the risk and reward? Here's some common mistakes, how to choose the right ones. Then we'll get into strategies and systems. And you can go through here and, you know, for today, for example, we're going to be talking a little bit about understanding the risk and rewards of Nadex spreads. Well, last week, you see right here, I did a webinar called Do You Know the Basics of Nadex Spreads? This is where we covered the basics. So if anything today kind of loses you a little bit or you're not quite sure what we're talking about, you can always go check out last week's webinar. Same thing, you can go through here and find basics of spreads, basics of binaries. We've got all kind of other, those are kind of the foundations we build on that. Should I trade binaries or spreads? How to collect premium? What are the top mistakes? How to manage your position, trading at key levels, all kind of good stuff here from beginner level to intermediate level to some advanced strategies as well. Okay, so definitely keep this place in mind right here of where you can go to get some of these past recordings. Like I said, Nadex does a great job at providing you a ton of free education and information here that you have access to 24/7 to go in and watch. Okay, another great tool that Nadex provides you, I want to bring your attention right here to this tab called Trading Platforms. You can go directly to the online Nadex platform. They have a great mobile app for your Android smartphone, or right here, Demo Trading Platform. Nadex will give you a $25,000 free demo account. All you gotta do is just fill out your name, your email, and a quick username and hit Open My Practice account. In just a few moments, you'll get an email from Nadex and it will provide you with a temporary password, okay? And you'll be able to log right into the Nadex demo platform. Once you do that, you can go right up here to My Account and right here to Settings, and then right here to Password. And that will allow you to change that temporary password that they email you. You can change that into whatever you'd like it to be, something easy for you to remember, a password of your choice. But the demo platform is a great place to, to get familiar with Nadex, get familiar with the different products that they offer, the different binary and spread contracts on the different stock indices, the forex pairs, some commodities, got 20-minute binaries, 5-minute binaries, and something you might have heard about a lot recently is the Bitcoin spreads, okay? And these are weekly spreads. They're a great way to trade Bitcoin with, upfront defined capped risk. All right, those are currently in the demo platform, and they're still kind of working out all the details on that and getting those spreads exact. So it might look, what you're seeing now, you might see some numbers change around and some sizes change around. They're getting all the details worked out about that right now in demo, but giving you a demo platform to be able to get used to it, understand how it ticks, as a Nadex spread, how the weekly spreads work. And those should be coming out on the live platform very soon here. And you'll be seeing all kind of announcements and, releases about that, but very exciting. Bitcoin is huge. It's been blowing up for a long time, as you know that. We've got a lot of people asking for ways to trade it, and Nadex is going to be releasing an amazing product here with the weekly spreads for Bitcoin with capped risk. So we all know how volatile, that thing can be, but keep your eyes and ears open out there for that announcement, for it to come out in live. It's going to be great. And I think it's going to be a huge part of a lot of people's day-to-day trading here. So once again, my name is John Skelton. I'm with Apex Investing. Apex and Nadex, two complete separate companies. Nadex is an exchange. Apex, we're an online education company. We're a group of traders helping traders. We've got over 20,000 members. We have strategies and systems, indicators, live trade rooms. A lot of our systems focus on risk management and probability. That's why we love the capped risk products of Nadex, okay? We're traders just like you. We trade Nadex products every day. We're an education partner here with Nadex. I've been with Apex now for about 4 years as head of operations. I've got a background as a licensed stockbroker and in the banking industry. I'm an educator, but again, I'm a trader just like you. I love trading Nadex binaries and spreads. We trade them all the time. We trade them every day in our trade room. And we're just here from one trader to the other, to help you understand the Nadex products, educate you on them a little bit, give you some ideas of how you can trade them, okay? So today, going to be a little bit shorter webinar today. Like I said, we've kind of circled back to some of the basics here. Last week, we covered the kind of basics, Nadex spreads 101. What are they, how they work, how do they tick, okay? We talked a little bit last week about the risk and reward, but today we're going to focus just on that. We're not going to get all crazy deep into, the Greeks and delta and gamma of spreads. We're not going to get crazy deep into, advanced strategies. I need you to understand, as we're building this house here, building from this foundation of spreads, exactly how the risk and reward works. Because I'll tell you, that is one of the biggest, most common misconceptions and misunderstandings about Nadex spreads. Okay, and it's one of the big things that I've seen actually kind of, I hate to use the term scare people away, but it has kept people away from trading spreads because they did not truly understand how they worked. And once you do, it's like a big aha light bulb go off moment of, oh, wow, I get it now. I'm going to start trading these things. And so I don't want you to go through weeks or months of that misconception and be missing out on the opportunities of trading spreads. Okay, so we're going to talk about risk versus the amount of money required to get into a spread trade. We'll talk about some of the various spread options and some ways to manage your spread trades. And I'm not going to go in and cover in detail, the basics of spreads like we did last week, but just a quick couple minutes recap here to set the foundation again. I've told you before, I used to call them box spreads because if you kind of draw them out on a chart, they look like a box. Spreads have a top and a bottom, or what we call a floor and a ceiling. Okay, so let's just set the stage here again, and then we'll move forward. So let's just say, for example, this was a chart of a euro dollar. Okay, and let's just, as example, call it euro dollar. The bottom of the spread, or the floor, let's say it was at 1.2400. And the top was at 1.2500. Okay, so between the floor and the ceiling of this spread, there's 100 pips. Okay, now the way a spread works is, let's just say, well, first of all, a spread moves in pips or ticks. Okay, whatever the last digit quoted is. Okay, and each pip is worth $1. Okay, now with some new spreads that Nadex is coming out with, like with the Bitcoin spreads, that will be a little different of how it moves. Okay, and we'll do some training on that. But in general, the last digit quoted, the last pip or tick, is worth $1. Okay, so quick example, if we were selling a spread here, which means we thought the market was going down. All right, remember I said it's kind of like a box. You're trading within the box. All right, the ceiling and the floor cap your risk and your profit. So let's say that we were selling a spread, all right, and we were correct, the market does go down. Well, we're not going to make additional money past the floor, all right? It could keep going and going and going, hundreds of pips, but we're only going to be profitable down to the bottom or to the floor of the spread. If we think the market's going to go down, so we sell it, but we're wrong and it goes way up, our risk, our loss, is stopped at the ceiling. We can't lose additional money above the ceiling. All right, we don't get stopped out if it hits a floor or ceiling. So as a quick example, if I sold this spread at 24.90, okay, well, from where I sell right here at 24.90 up to the ceiling of 2,500, how many pips difference is that? If I sell at 24.90, my ceiling's at 2,500, that's 10 pips, right? So my maximum risk here is 10 pips because I sold here wanting it to go down. But if I'm wrong and it goes up 100 pips, well, my only risk is from where I sold at 24.90 to the ceiling here. So my risk is only 10 pips, each pip being worth $1. Okay, so my maximum risk is $10. So it might have moved against me 10 pips and then moved up another 90 pips. It might have gone against me 100 pips, but my only risk, my only loss there is from where I sold to the ceiling. Okay. If I'm correct and the market goes down, it may only go down 10 pips, 50 pips, or it might go all the way to the floor. There's 90 pips of potential profit here. All right, each pip being worth $1, so there's 90 potential pips of profit. Okay, if I'm buying a spread, it's the same thing, just the opposite. All right, I can't make additional money above the floor. I can't lose additional money below the, or I'm sorry, I can't make additional above the ceiling, and I can't lose more below the floor. So same type of example, if I bought right here at 24.10, thinking the market's going to go up, it could go against me, 100 pips down, but I'm only exposed down to the floor. So from where I bought at 24.10 down to the floor 2400, it's only 10 pips. Okay, each pip is worth $1. 10 pips of risk, 10 pips of cost. My maximum risk is $10. So we talked about this briefly last week, but I want to talk about it a little bit more here. So, when we talked about, okay, well, what is my risk? All right. Well, let's do something real quick here. Let's pull the Nadex platform back up. And I just want to make this very short and simple and very practical. Okay. I really want to drive this main point home to you. Let's just look at, for example, say some indices spreads, and let's pull up the Wall Street 30 here, okay, which is a derivative of the Dow. All right. So what we've got is we've got multiple different spreads to choose from. Another great thing, like, again, I got to give Nadex a ton of props and kudos for this. Just right now today live on this webinar, if I was looking to trade the Wall Street 30, I wanted to trade spreads, check out all the options I have here. I've got spreads that open up at 12 noon that expire at 2 p.m. I've got other spreads that open at 1 p.m. that expire at 3. I've got other spreads that open this morning at 8 a.m. They go all the way to the end of the day at 4:15. And I've got some that open up last night at 6 p.m. that expire at 4:15. And check these out, these dailies here. Well, I've got 4 different spreads to choose from. And notice they all have different floors and ceilings. See that? So whatever my strategy or system is, whatever the market might have moved, right? Because let's say there's one particular spread, if these opened up at 6 o'clock last night, and let's say the market moved way up and the market was already past one of those spreads. It wasn't really tradable directionally with the current trend of the market. Well, look, I've got all kind of other spreads in here with different floors, different ceilings. I go to these 8 a.m. to 4:15s. I've got another different 5 spreads there. These 2-hour spreads, 1 p.m. to 3 p.m. Look, I've got 5 of those with different floors and different ceilings, and I can get into them all at different prices. So I've got a ton of different options with Nadex spreads to normally be available to me, any time during the day that I'm trading this, whatever strategy or system I'm trading in. Okay, so there's plenty of options there. But let's just take a look at something here. Let's pull up, let's see here. Let's just pull up these 1 p.m. to 3 p.m.s for now. Okay, now different spreads, not only do they have different floor and ceilings, but they have different widths. Okay, for example, look at all these spreads here. See this? 650 to 750, 600 to 700, 550 to 650. These 2-hour spreads here, for example, on the Wall Street 30, these are 100-point spreads. All right, you see that? The floor and ceiling, there's 100 points between them. If we go down here to some of these dailies here that opened up this morning at 8 o'clock, well, what are these? From 24.8 to 25.1. 24.650 to 24.950. These are 300-point spreads. And that makes sense, right? Something that's only open for a couple hours might only be a 100-point spread. If I got something that's going to be open 8 or 9 hours all day, I might prefer a larger spread, right? Because there's a higher probability of the market making a bigger move over 8 or 9 hours than it does over just 2 hours. Make sense? What about these dailies here that opened up last night at 6 o'clock? Okay, well, these are 400-point wide spreads. Okay, so there's different spreads, different expirations, different floor and ceilings, and different sizes of spreads. Okay, now on top of that, last week when we covered the basics, I talked to you about how the spreads are determined, how they're made, right? And if you remember, that what we talked about, let's just pull up a quick chart here, okay, just to help you understand this. Remember we talked about, some people ask, well, how do they determine the spreads? Do they just pick a floor and a ceiling, or, do the market makers kind of have it biased in their direction? Like if the market's in an uptrend, then they're gonna, determine the spreads like in their favor, where it can't really go up anymore. No, not at all, okay? That's not at all how it works, is it? We talked about how that works. And for example, how when those new spreads come out, okay, how they're determined. So let's just take a quick look at something here. And I'm going to change this chart. This is a chart of the Dow. I'm going to change this over to a 5-minute chart. And we're going to look at something real quick here just to recover this section because it's very important for you to understand this. So here's a 5-minute chart. Right now we're at 1:21 p.m. Eastern time. Where was the market right here at about 1 p.m.? Because what happened at 1 p.m.? What opened at 1 p.m.? A new set of spreads, right? A new set of spreads that open at 1 p.m. and expire at 3 p.m. But let's say that it's 12:58 p.m. Okay, and we're sitting here at 12:58 p.m. and we want to trade some spreads. We know that in just a couple of minutes a new spread is going to come out, right? Well, but what's it going to be? We have no idea what the floor and ceiling is going to be. We have no way of even estimating what the floor and ceiling is going to be, right? Wrong. We actually can, because at 1 o'clock, we know a new set of spreads is going to open. So if we're at 12:58 here, we know a new set of spreads is going to open. And the way these spreads are determined is at like 1:58, 1:59. Okay, what's the first thing we know about these spreads? Okay, that they're 100 pips wide, correct? See that? Let's just look at another quick example here. Let's pull over to forex spreads, okay? Keep it a little simpler as well. And let's look at a euro-dollar spread. Let's look at these that open from 1 to 3. Notice there's 3 different spreads. You see that? And they're what? 1790, 1890, 1740, 1840, 1690, 1790. They're 100 pip spreads. So here's how it works in a nutshell, okay? So these spreads that opened up at 1 p.m., okay? Where was the market at about 1 p.m. here? Right here at 24,598. You see that? Well, let's go back over here to the Dow, and let's just happen to pull up these 1 p.m. spreads, okay? So what do we notice right here? 24,600 is the floor of this spread. 24,600 is the ceiling of this spread. See that? Where was the market at? Right here at about 1 o'clock. See the price off to the right? 24,600. That's how these spreads are determined. If they're going to come out at 1 o'clock, basically right there at 158, 159, all they do is say, okay, so the market's right here at 24.6. So let's make a 100 pip spread that has a bottom or a floor of 24.6 and goes up 100 pips to 24.7. Okay, I'd even have to squeeze this down here. Does that make sense? Then they say, let's squeeze this even more. Then they say, okay, so now let's also make a spread at 24.6 that has a top or a ceiling of 24.6 and goes down 100 to 24.5. That makes sense? Then they're going to make another spread that goes from 26.50 right in the middle. Okay, let's do it right here. Sorry. They're gonna make another spread that goes from 26.50 down to where? 25.50, which is also what? 100 points. Does that make sense? So it's not just randomly selected by Nadex or randomly selected by a market maker or from whoever. There's no bias about it as far as market direction. It's right there before those spreads open, and these are supposed to be 100-point spreads. Well, wherever the market currently is, there's a spread that starts there and goes up 100 points, a different spread that starts there and goes down 100 points, and then there's a spread that's put right in the middle between the two, 100 points. Okay, then Nadex goes in and even adds 2 more on top of that. Okay, giving you 5 spreads here. Some of the markets only have 3 spreads, some of them have extra spreads. So that's how the spreads are determined. Okay, you can go through and check those out and look at the contract specs and so on. So there's different spreads available. All right, now remember when we talked about these daily spreads here? Okay, and there's 4 different spreads here, and these were 400 pips wide or 400 points wide. Okay, well, now that you understand this example, okay, and it's a little easier to explain it to you with these spreads that are 100 points wide. Well, now imagine that these spreads were 400 points wide. Okay, well, let's just say that middle spread that was 400 points wide. Well, if the market was right here, okay, and a new spread opened up that was 400 points wide, and this particular spread happened to be in the middle, what would that mean? That would mean that there's 200 points up this way and 200 points down this way to make up this 400-point spread. Everybody follow me there? Right? Like this spread would be at 0 up to 400. This would be at 400 down, right? But this one right here in the middle, if it was 400 points wide total, and the market was right here in the middle, the pricing was right here in the middle, you've got 200 up this way and 200 up down that way. Okay, everybody got that? So now let's go back over here. So just to see if the class is putting this all together. Remember in this example here, if I bought at 24.10, thinking the market's going to go up, my floor is at 2400. So there's only 10 pips or 10 points of potential risk there, correct? Each point being worth $1. So the maximum risk is $10. Make sense? So for me to enter this trade, so again, what is the one thing I love about Nadex? Upfront defined maximum capped known risk, right? I know before I enter this trade that the very most I can lose is 10 points or $10. If I'm trading spot forex or if I'm trading a futures contract and I enter this order right here and the market flash crashes, zips, shoots against me, bam, 100 points down, I'm down 100 points, right? I've lost that much in my account, or maybe I don't even have that much in my account and I'm losing more than is in my account if I'm trading like a future or spot forex, right? But with Nadex, it doesn't matter. It doesn't matter if the market crashes down 10, 20, 30, 40, 100, I'm only down $10. That's the most I can lose. So in order for me to enter this trade and place this trade, how much money do you think I have to put up out of my account? How much money is put on hold from my account for me to place this trade? If my maximum potential risk, my maximum potential loss is $10, then yeah, exactly, Lau. That's the only amount of money I have to put up out of my account to get in that trade. Okay, and I have a profit potential all the way up to the ceiling based on the market move. Okay, so does that make sense? With Nadex spreads, whatever my total risk is, that's the amount I have to put up out of my account. So quick question. If I was to buy this particular spread, has a floor of 2,400, a ceiling of 2,500. If I bought into it right here at 2,450, what is my risk? If I buy at 2,450, the most it can go against me is down to the floor of 2,400. So how many points of risk do I have? 50. Each point is worth $1. So what's my dollar amount risk on this trade? Max. Well, if I bought at 2,450, I only am risking down to 2,400. 50 points, $50. So if I bought in that trade right there at 2,450, how much money do I have to put up? How much money is Nadex going to put on hold out of my account to enter this trade? $50, right? So the amount of my risk is the amount I have to put up to get in the trade. All right, one more example. If I bought up here at 2,470, my risk is therefore 2,470 down to 2,400. So 70 pips or 70 points, $70. So that's the amount I have to put up. Some people get confused of there's so many different spreads and expirations and different floors and ceilings, and I don't know how this works. So, you know, I just kind of go in here and I'll click one of these spreads, and you know, I'll just say that, hey, I want to buy it, and I'll put 1 in here, and okay, it says max loss 27, max profit 373. Ooh, I like that. Okay. Then I'll go into this one and I'll say, okay, well, if I want to buy this one, let me do one. Oh, now I got to put up 379. Can only make 21. And some people are like, I don't understand these spread things. I have to put up so much money and they're so different. I don't get why. Well, it's very simple. Now that you have that part down, let's look at these spreads. Okay, let's look at these spreads. What does this spread say? The floor is 24,600. The ceiling is 25,000. So it's a 400-point spread. Where can I buy this spread at right now? 24,625. So if I can buy it at 24,625 and the floor is at 24,600, what's the difference there? From 600 to 625 is how much? 25 points, $25. So if we click this and we say, hey, I want to buy this spread, I want to buy one of them, it tells us right there. The max loss is 25, the max profit is 375. Do you see that? Guys, does that make more sense for those of you that are new? Wherever I buy in, from where I buy in down to the floor is my risk, and therefore the amount of money I have to put up out of my account. Why was this other one so much more? Well, look at the difference of the floors. See, this one we looked at, it had a floor of 24,600. This is a floor of 24,200. So this one has a floor of 24,200. I can buy it for 24,578. Well, from 577 down to 200, that's like 377 points, isn't it? That's a big difference of where I'm buying in compared to my floor. You see it? So see, guys, once you understand how those spreads work, it makes a lot more sense to you why some are more expensive or less expensive as far as the amount that you have to put up. Are there any questions about that basic concept right there? For some of you, that's very elementary. You've known that for years. You've traded these for years. But for those of you that are newer to these webinars and to Nadex, you might not have quite understood, man, why are those numbers so different, right? But does that make sense? Any questions on that part right there? Okay, so now that we understand how the spreads work a little bit, and now that we understand how the risk and max loss numbers come up with, we need to take that a step further, okay, and make sure we fully understand that. Okay, let's take a look here at this one, for example. Okay, and let's just say if we were taking a look at this one. Well, this particular spread is kind of right in the middle, right? Goes from 24.4 to 24.8. I can buy one. My max loss is $203. My max profit, $197. Okay, so I'm risking about 200 to potentially make 200. Okay, so what about this? Okay, let me change that question. How many of you on this webinar are binary traders? How many of you on this webinar, just raise your hand, little quick show there in the comment box to say yes for me. How many of you trade Nadex binaries? But you haven't really traded spreads, but you trade Nadex binaries. Okay, here's the one thing I need you to do. When you're learning spreads and considering spreads, what you have to do for a minute is completely just forget everything you know about binaries, because they work completely different. If you're a binary trader and you come over here to the Wall Street 30 binaries, okay, and you're looking right here at some different binaries, and you pull up this one right here, and you say, okay, well, I want to go ahead and I think the market's going long. I'm going to go ahead and buy this binary. Oh, man, your heart starts beating, doesn't it? You're like, oh, man, what does your eye immediately go to? Max loss 77.50, right? You think, oh, well, I don't know. Why? Why do you do that when you see that max loss number with a binary? Because you know that with a binary, it's a true or false statement that either yes, it happens, or it doesn't happen at expiration. It's all at expiration on a binary, it's all or nothing, right? So, and it can be all or nothing based on 1/10 of a tick or a point. What does this binary statement say? Wall Street 30 will be greater than 24,587 at 2 p.m. So if you took this trade right here, risking 77.50 to make 22.50, and the market expired at 24,586, just 1 point the market went against you below your strike. 1 point, or even 1/10 of 1 point, but let's just say 1 point. How much money would you lose instantaneous right then at expiration because of 1 point? You would lose $77.50 because the market went 1 point below your strike, right? If it went 1 point above your strike, right, be a different story. So if you're used to binaries, you look at 1 point against you costing you this whole amount right here, right? You know, and you see max loss 77.50. Oh man, 1 point will lose that whole thing for me. That's how we look at it and think of it as binary traders, because that's the case, correct? At expiration. So what is it that freaks you out when you say, hey, I want to start learning these spread things? And, you know, so I come over here and, you know, I come over here and I'm checking out these spreads, and maybe I want to buy this one right here. Maybe I want to get one. Oh boy, max loss 193. Forget it. I'm not trading that. Forget these spread things. I'm not risking that much. I'm not going to put that much money up. Okay, step back for a minute. Calm down for a minute. Take a deep breath. Okay, where are you buying into this spread right here? 24,593. At expiration, if this spread expired at 24,592, if it expired 1 point below where you bought it, just like our binary example a minute ago, if it expired 1 point below the strike, you lose it all. But if this spread expired 1 point below where I bought it from, bought it at 593, it expired at 592. How much do I lose? Let's look back over here. What have we been teaching you? At expiration, what happens? With the spread, what happens? 1 point, each point is worth $1, right? So I bought it at 593, it expires at 592. How much did I lose? I lost $1. $1. Okay? That is the big difference between binaries and spreads. So when you see this max loss number here, should that freak you out the same way it freaks you out with a binary? Should you view that number the same way you view it as a binary? No, because it's completely different product. Does that make sense? It's not losing all or nothing at expiration. What would have to happen for you to lose all of this amount of money right here that you put up? What would have to happen on the Dow? Well, the binary, all it has to happen is it go against your strike 1 point to lose all this. What would have to happen on a spread for you to lose the whole $193 risk? Well, the Dow would have to do what? It would have to go against you at expiration 193 points. Does that make sense? It's like I can't even see that far on my chart here. I'd have to scroll the chart, right, way down to find that. So does that make sense? And so what I'm trying to tell you is, don't be overwhelmed by this number right here when it comes to spreads, because that's just the amount of money that's placed on hold in your account to enter the trade. Now, technically, is that your max loss amount? Well, yeah, if you let the market just keep going and going and going and going against you, right? Who here on this webinar has a strategy that says, okay, I'm looking at my, whatever random, strategy, system, indicator, whatever you want to throw on here, okay? Whatever it is you're using. Who of us has a strategy that lets you be wrong and lets the market go against you 193 points for day trading? If you have that strategy, you need to, relook at it. Most of us have a strategy, right? Or wherever our strategy or system is, that, hey, we think the market's going up, but if we're wrong and it comes against us, say 20 points, we're going to get out, right? 20, 25 points. Most of our strategies or systems fit into that range somewhere, don't they? When we're trend trading. So if I'm wrong, if I think the market's going up, but it ends up coming down and it comes against me 20 points, I'm probably exiting the trade anyway, correct? Right? So if I happen to enter this trade and I have to put up out of my account $193 to enter the trade, thinking the market's going up, but I'm wrong and it goes down against me 20, 25 pips, I'm exiting the trade, following the rules of my strategy or system. So if I got into this trade and it went against me 20 points and I got out, how much money did I lose? Went against me 20 points, $1 per point, 20 points is 20 bucks. Okay? So it's mainly, well, I want all of us to understand that, but particularly you binary traders that are used to looking at that number as your all or nothing risk amount at expiration. You have to think differently and set that aside and realize that's not how it works with Nadex spreads. It's, you know, $1 a point, whether in your favor or against you. It's a way to mimic the market, okay? It's a way to, you know, trend trade and mimic the underlying market, just like you would with a futures contract, okay? But you have capped risk, okay? So does that make sense? Any questions about that particular aspect there of what we covered? Aruna, you're asking a question about at expiration, indicative price and the price for buy in. It would be the where you bought in compared to the floor or the ceiling, or yes, where you bought in compared to the indicative price, as long as it's within the floor or ceiling. Okay, we're going to be doing some webinars on that here over the next few weeks as well. Okay, on the differences of in the money and out of the money near the market spreads. So, okay, guys, well, I appreciate your time today. Thank you for taking time out of your week and out of your trading day to join us. Like I said, last week we kind of established the basics of spreads. Today, I wanted to just reaffirm to you how that your risk and reward is determined. Okay, again, you have to remember the top and the bottom, the floor and the ceiling, the box. You're trading within that box, within that house, within that floor and ceiling, and your risk or reward is determined on where you're getting into the trade between that floor and ceiling. And whatever that max risk number is that comes up here on your order ticket, you just have to keep in mind, yes, that is truly technically your max loss amount. But there's a difference between realistic planned risk and max risk. And your realistic planned risk is to do what the chart is telling you. Follow the rules of your strategy or system. Just because you have to put up a certain amount of money to enter the trade, it's not an all or nothing risk amount on a spread the way it is with a binary. Okay? So, all right, so once again, hop on over to nadex.com. Make sure to get signed up right away for a demo account. Great place to, you know, learn Nadex, practice any strategies or systems. If you're a binary trader and you're just now getting into learning spreads, make sure you have a demo account to start trading spreads and demo trading spreads. Get used to them, get a handle on them. Go right here to the under Learning Center, go to Webinar Archive. Find us here, Apex Investing Institute. Check out some of these previous webinars. Again, if you need to go back over the basics of spreads, if you missed that last week to help tie it into this, that'll really help you get that foundation that we're going to keep building on here over the next couple of weeks. Okay, guys, thank you again very much for your time and for your interaction. Hope you have a great day and a great weekend. We will see you on the next webinar. Go right here to Learning Center, Webinars, see what's coming up next, get signed up. Make sure to get registered for those and get some reminder emails. So thanks again. We will see you next time. Thanks a lot, guys. Bye.